Hey, it's Dan Morales, and this is Homebuyer Radio, episode number 20. This week, I wanted to talk about private mortgage insurance, or what we call PMI in the mortgage business. I wanted to expand on some of what we talked about last week. So last week, what we talked about is, kind of what is private mortgage insurance, and, what does it really do for a lender, because it really doesn't do much for you as a client, other than it allows you to have a down payment of less than 20% when you're buying a house. Now, we talked about, some of the things that can impact what your cost of private mortgage insurance are. But this week, what I wanted to talk about is how private mortgage insurance can be structured. Because more often than not, what happens is clients oftentimes think that when it comes to PMI insurance, the only option they have is to pay PMI insurance as part of their monthly payment. Now, that is probably the most popular way that mortgage insurance is done, and typically how you see it, paid in most cases. But what happens is sometimes people don't understand that there are other ways that you can deal with mortgage insurance. So you can always pay it as part of your monthly payment, and that, again, most traditional way that it's done. But some other ways that mortgage insurance can be paid is you can have what's called a lender-paid mortgage insurance policy. Now, lender-paid mortgage insurance policy is basically a policy that the lender or the bank, if you will, pays for as part of your mortgage. Now, what happens is, in most cases, what lenders do is they charge you a higher interest rate in exchange for not having to pay PMI insurance. Now, the lender still obtains a mortgage insurance policy, but they actually pay for that mortgage insurance policy by charging you a higher interest rate. And in most cases, what happens is that higher interest rate gives the bank a better return on the loan, which allows them to pay for that mortgage insurance. So the benefit to a lender-paid mortgage insurance policy, again, you're not going to pay any PMI on a monthly basis. You're going to pay a higher interest rate, but in most cases, the overall monthly payment is going to look a little more attractive with that lender-paid mortgage insurance policy versus paying PMI on a monthly basis. Now, one of the things that you want to give some consideration to when you're considering those two options is how long you plan on staying in the home, or how long you plan on having that loan. Because if you take, let's say, a lender-paid mortgage insurance policy where you have a higher interest rate instead of paying PMI insurance, what happens is you have that higher interest rate for the entire term of the loan. If you were to pay the PMI on a monthly basis, there is a point in time in that loan's amortization, or if you will, when you're paying the loan down, there's a point in time where that mortgage insurance is going to go away and you would no longer have to pay the monthly mortgage insurance. So in that case, especially if you're going to keep a property or a loan longer term, it could make sense to pay the PMI on a monthly basis, even though the initial monthly payment may be a little bit higher than what it would have been if you would have taken that lender-paid mortgage insurance policy. Now, a couple of other ways that mortgage insurance is actively done is you can have what's called a single premium. That's where you pay the PMI insurance in one lump sum, and you, if you will, get a discount for paying for it in one lump sum. Now, in some cases, you can actually finance that lump sum into the mortgage, which can be beneficial to you as far as lowering your monthly payment and not necessarily having to come up with a bunch of additional cash at the time of closing. Or you can choose to pay that lump sum in cash at the time of closing as well too. That discount can be worthwhile and is definitely something to look into if it can make sense for you. Another way to do it is to do what's called a split premium, where you pay some of the mortgage insurance up front and then you pay some of it as part of a monthly premium. Now, in that case, your monthly premium you're going to pay is generally going to be a little bit lower than if you didn't pay under that split premium option. That's because you're paying a portion of the mortgage insurance up front in a lump sum, and then, of course, you're paying some of it as part of the monthly payment as you go. So those are kind of the four most common ways that you'll run into mortgage insurance. Mortgage insurance that's paid on a monthly basis tends to be the most popular option as far as what's out there. Lender-paid mortgage insurance, where you get a little bit higher interest rate in exchange for not paying the PMI insurance on a monthly basis, is probably the second most popular option. Single premium, where you pay that mortgage insurance in a lump sum in one shot and then you're done, is, I would say, probably the third most popular option. And then fourth option tends to be the split premium, where it's kind of a combination of the two. Now, which option is best for you can really depend on how long you think you're going to keep the home, how fast you think you're going to pay the debt down, and kind of your big picture, if you will, long-term financial plan. So a good loan officer is going to ask you questions and help you understand how different mortgage insurance strategies can impact you when it comes time to finance your home. Now, of course, if you have a down payment of 20%, you're not going to have to deal with mortgage insurance as part of what you're doing. And if you're looking at some type of government insured or government backed loan, those loans have different features where some of these options really wouldn't even be an option for you, right? So as a loan officer, my job is to help you figure out what's going to be the best way to finance your new home. That includes mortgage insurance if you're going to have a down payment of less than 20%. Again, my name is Dan Morales. If you have a question or a concern or anything that we can answer for you, hit us up. You can reach me at dan@danmorales.com. Again, dan@danmorales.com. That's DANMORALEZ.com. And you can hit my website at danmorales.com. Again, Dan Morales with Northpointe Bank. My NMLS number is 709-729, and Northpointe Bank is an equal housing lender.